25 minutes left for the MPC decision, and you will hear that right here on NDTV Profit, so don't go anywhere. But while we wait for that, a couple of important conversations with companies which have come out with the results. One of them is Signature Global. They reported Q1 numbers, revenues were up 141 crores, but there was an EBITDA loss. Of course, the pre-sale numbers were up even stronger at 255% when they gave their Q1 update. Rajat Kathuria, who's the CEO at Signature Global, with us on the show. Rajat, thanks much for joining in. What does this delivery of Q1 set you up for the rest of the year? Because I remember when we spoke at the end of FY24, the growth then and the targets for FY25 were fairly stiff.
So, Neeraj, thanks for inviting us to your show. We had taken fairly stiff target for the year. Over the last 4 years, if you will see, we've grown our sales at about 62% sales CAGR. Just putting things in perspective. So, for instance, this quarter, we've done sales of about 3,100 plus crores. This was the sales being done for the entire year, was lower than in FY22 was lower than the sales we've achieved in one quarter. Or almost, 90% of sales which we did in financial year 23, we've achieved almost 90% of that within a quarter. So, sales numbers are seeing, some good growth. There's a good momentum and a continued sort of, momentum around, sales absorption is what we are witnessing. What this does to us is it makes us confident to achieve our stiff target of 10,000 crores of annual sales for the year. It just puts us in a fairly comfortable, not comfortable, but I would say, a convenient position to be achieving.
Rajat, sorry, but by that you mean the pre-sales numbers, right? Because I mean, the revenues, reported revenues is 400 crores. So don't quite look at that. Yes. You're saying pre-sales, you will touch about 10,000 crores for the year.
Yeah, Neeraj, actually, see, I'm saying pre-sales we'll achieve about 10,000 odd crores. That is the guidance given by us. In terms of revenue recognition, which is basis projects which are getting completed and where more than 90% of collections are coming from customers, we've given a guidance of 3,800 crores for the year. Against that 3,800, we've achieved 400. But, we expect to catch up on that aspect over the coming quarters.
Rajat, good morning. Tamanna here. In terms of revenue recognition, do you expect this to improve significantly over the next 2 quarters, and why? What are you seeing changing there?
Yeah, morning, Tamanna. We expect a lot of improvement in revenue recognition over the coming 2 to 3 quarters. There are about 27 ongoing projects adding up to about 16 million square foot of area under development, which is getting completed over the coming 8 to 9 quarters. And over the next 2 to 3 quarters, also, we are seeing some significant project completions taking place, which will have a positive impact on the revenue recognition side of the business.
Rajat, hi, it's also Samina joining in. Just break this down for us. How much have you delivered in terms of square feet? And what is your current pipeline of saleable area? And what do you anticipate you're going to sell over the next 2 to 3 quarters in that pipeline?
Yeah, sure. So, see, I'll put it into 4 different buckets. One is projects which we've already delivered, which is close to some 11 million square foot. Okay. The second bucket is projects which are at advanced stages of completion, which we just spoke about. That number stands at about 16 million square foot, stroke 27 odd ongoing projects, which are being delivered over this near-term time frame. The third bucket is projects which we've recently launched. Over the last 2 quarters, we've done 2 large launches in Gurgaon. One was just off the Dwarka Expressway by the name of Deluxe DXP. And second project was by the name of Titanium SPR, which was just across, the southern peripheral road, which is quite a prime location. These 2 projects, which is the third bucket, is at early stages of development and is about 5 million square foot, roughly. In addition to all of this, we have a pipeline of almost close to 30 million square foot, which we can launch over the next, 2 to 3 years. This has a GDV potential of close to 50,000 crores. And this is the dry powder on which we are sitting. And bulk of this inventory is in some of the key micro markets, which we are playing within Gurgaon. So these are
Rajat,
the, by and large, four buckets of, pipeline or portfolio of the company.
okay. And the focus, Rajat, remains on your affordable segment. How much of it goes to premium? What is the kind of strategy in the mix there?
So, see, we are playing the mid-income and slightly upper mid-income stroke premium housing as of today. At current land prices, doing hardcore affordable is not panning out because we do like to stick within the city developments rather than going too much away from the city limits. So we are playing mid-income and premium housing theme. I would say for the year, the outcome should be equal for by and large, equal for both of these themes.
Right. Rajat, also you managed to do quite well in terms of reducing debt, and that's always a good sign for a well-oiled company. Reduction in debt of about, what, 180 odd crores. What does your debt equity ratio stand at, and do you intend to reduce that further, or would you be taking on some more debt in order to expand and keep up to those aggressive plans you have?
See, we are in a build to sell business and sitting on fairly good, land inventory with us at this stage. And there is literally minuscule amount of land payments which are due on this entire land inventory, which means that as we will launch new projects and we'll, that will follow, collections will follow up basis these new launches and completions. Net debt number should continue to go down. So if you look at this quarter, we did operating collections of about 1,200 odd crores. We created an operating surplus in excess of 500 odd crores. It was about 530 crores of surplus which we created, operating surplus which we created. About 55% of that surplus went into new land acquisition, which means that we did new land acquisition stroke replenishment only out of our operating surplus. And the balance 45% went toward, debt servicing and also towards debt reduction. So out of operating cash flows, we've reduced our net debt number by about 170 crores.
Rajat, just on the actual numbers, so it's been an interesting quarter from the point of view of, you've moved to year on year to a net profit from a net loss. Your EBITDA losses have also shrunk. This is a trajectory you see continuing?
So I see a big change happening, on these parameters by the end of this year. See, project completions often tend to be lumpy, and if we see and revenue recognition is happening only basis project completion and not basis the sales which we are doing. For this year, we have an aggressive target of about 3,800 odd crores of completions, which will be a significant area also getting delivered. It's just that a lot of inventory in the previous years was of affordable projects or of early stage mid-income projects, but we are completing significant amount of projects during this year, and hence by the end of the year, if we are able to recognize about 3,800 odd crores of revenue, you will see fairly good levels of EBITDA impact also showing up.
All right, thank you so much, Rajat Kathuria, there, CEO at Signature Global, talking about the quarter gone by, and the stock's doing pretty well actually for the company, 1% up right now, and they've actually swung from a nearly 7 crore loss year on year to a 7 crore profit. So that's been a good time for them.